Good morning and welcome to Almus Market Mornings, your daily dose of global financial updates with me, Swaraj. The FOMC outcome is out, and I think the market movements perfectly sum up the Fed's action yesterday. 25 basis hike plus data dependency for the future was the core theme of the meeting. Dollar did not react immediately, but now we are seeing slight weakness in the overall dollar trend. JK, what was your interpretation of Powell's speech, and where would you categorize this meeting in the hawkish to dovish scale?
Good morning, Swaraj. Yes, Powell hiked 11th time out of the last 12 meetings, bringing the total monetary tightening to 5.25% in the last 17 months. And it is the highest by the US central bank rate in the last 16 years. But if you had expected they will announce this hike to be the last, you would probably be disappointed. And few were actually. And it may well be because Fed is shying away from saying so because their effort is to slow down the economy. But if I have to categorize the Powell's statements, it was right down the middle of dovishness and hawkishness. And as someone really very succinctly put it, it was all bark but no bite. Yes, the post-meeting statement was almost unchanged, while there was minimal forward guidance given in the press conference. And if the Fed remains vigilant, eyeing core inflation, awaiting next few inflation and employment reports. At the same time, they're happy with the way inflation has been moving so far, but they would like to see more. And the Fed staff is not now projecting a recession, although they are expecting a slowdown. So this could well be the best that the market would have expected for their Fed decision. And if you look at the market discounting, November sees almost a 40% chances of a rate hike to 5.75%. And importantly, no cuts are priced in till June 2024. So that's a big change, but it's possibly we are moving into higher for longer zone. And data dependency, one should hope that the inflation does not start shooting up again, and then things should be rosy for the markets. Coming to the markets itself, I think bond yields continue to be volatile, and the feature of recent markets is that the bond yields are moving all through the day, right from the Asian time. Yesterday, Australian CPI came much lower, coming at 0.8% for the June quarter, lower than the 1% that was estimated, and 1.4% seen in June quarter. And this pushed the yields down across. And in the European time, again, there was more data that showed, the loans given to households as well as the companies dropped quite a bit, 1.7% on year. And this adds to the condition of slowing down in the Eurozone economy. And again, that was another reason why the yields were slightly down. In the US market, we had the US home sales that fell for the first time after 3 straight monthly increases, but the trend remains strong. And these actually again, gave some support to the yields. But after the Powell statement, the yields have actually dropped down, both in the 10-year and in the 2-year, but all within the recent ranges. I would put it down to, no much of papers that were received yesterday, but a lot more are planned in the coming days, and that will be actually supporting the yields. And for the equity markets, it was a neutral day because Dow rose for 13th session in a row, while S&P 500 and Nasdaq were almost unchanged. On the currency market, it does look that while market may not be expecting too much from ECB, the positioning itself is weighing on the USD, and that has actually come below the 140 psychological level. Once again, seeing good selling from investors and Japanese exporters. So tomorrow is the D-Day for Japan. Today, of course, we have the ECB's meeting on policy, and the expectation of ECB is whether they will focus on growth now, than inflation. Possibly, if they do expect possibly there can be a dovish tilt to their policy statement, although their hike for today's meeting is well into the price. And also looking at the euro, which affects the export dependent economy a lot. So they can, at least the hawkishness which we used to hear from Lagarde the previous meetings, I think that will not there today, if not being outright. On the currency market, Chinese yuan has been the center of focus apart from yen, because Chinese yuan has strengthened somewhat after the recent spate of announcements from the Chinese authorities Politburo meeting. But economy watchers are not so impressed by the announcements made, because many details are missing, and the announcements made are not really addressing the structural issue of the Chinese economy. There is a huge unemployment that the economy is facing, and the manufacturing on which the economy really rests is actually slowing down in a big way. So not seeing much of a downside for USD Chinese yuan, at least based on the fundamentals, although Chinese central bank might try to see that it doesn't weaken too much from these levels in a short period of time. But overall, dollar is looking weak. Nothing to take away from Fed, but it seems to have completed a correction which started after falling to 99.5 and rising to 101.5, and then on the way down now we were seeing selling across currencies, or selling of the dollars against various currencies. Australian dollar, despite the CPI coming lower and the expectation of another pause by the Australian Central Bank, and the euro, which has crossed 1.11, and the dollar yen, which has come below 140. On the rupee, the short covering continued. Yesterday's market went as high as 82.04. Seems like the cap is also actually narrowing for the USD INR. Did not cross even 82.10. 81.70, as we all know, is turning out to be a very strong support. So the ranges, even the medium-term ranges or the month-on-month ranges, are also narrowing a lot. So be prepared for some big breakout at some point of time. But right now, it's only flows that are guiding. And yesterday and day before, we had seen some good buying flow. We really keep an ear to the ground as to what kind of flows that are going, and really not correlated so much with day-to-day movements in the dollar index. So looking forward to many events: ECB, US GDP, US jobless claims, then Japanese central bank meeting, and finally the German inflation tomorrow. Thank you.
Thank you, JK. And the major theme after the Fed meeting seems to be higher for longer. And it was definitely a disappointment for the pivot players, as Fed did not say that this was the last hike, but they'll be following a data-dependent approach. November now sees a 40% chance of a rate hike and no cuts priced until June 2024. In the Eurozone, we saw the recent data where loans given to households and businesses dropped. So definitely it's a slowdown in the economic activity happening over there. Now the focus will be on ECB and the BOJ meeting. And on the currency front, we saw Chinese yuan strengthening after the stimulus measures announced, but the structural issues of the Chinese economy remains unaddressed. On the rupee front, we went as high as 82.04, but now it seems the upside cap is narrowing. So 82.10 seems to be a good upside cap. That's it from us today. Thank you so much for listening. Tune in tomorrow for another round of fresh updates.